Let's go back to that interest rate decision in the last couple of moments. Bank of England has announced that it is holding interest rates at 5.25%. This, as Rishi Sunak last night boldly claimed to MPs that 2024 will be the year the economy bounces back. Well, joining me right now is independent economist Julian Jessop. Good afternoon to you.
Good afternoon.
Thank you very much indeed. Well, look, after that, good news on the inflation front, heading back towards that 2% rate of inflation that the Bank of England is actually, that's their job to get to. We are in better territory when it comes to inflation at 3.4%. There was a little scintilla of hope that that might have meant that the meeting of the Monetary Policy Committee of the Bank of England yesterday, they made a decision on the Wednesday, announced it on Thursdays at midday every time, that they might possibly consider an interest rate cut. Do you think they should have?
Well, first of all, yes, I would have cut rates today. Indeed, I probably would have cut rates several months ago. The key point is that monetary policy is supposed to be forward-looking. So although inflation is above the 2% target now, looking ahead, it will drop below 2% in April because of what we already know is going to happen to domestic energy bills, and probably remain below 2% over the rest of the year. So there's no really good reason to keep interest rates as high as they are now. That said, it wasn't a huge surprise that the bank didn't move today. Indeed, at the last meeting, there were still two members who voted for an increase in rates. But
sorry, are
the
you
good news,
kidding
at
me?
least,
Because
is that
we always
they've
find
changed their
out
mind.
afterwards, don't we, that how people voted.
Well, we now
on
know
what
that
basis?
those two members actually voted to leave rates on hold today. So there has been a shift in the balance of opinion on the Monetary Policy Committee. We had 8 votes for no change today, only 1 for a cut, but I think that will change over the next few months.
Yeah, but this is the thing. A lot of people are saying that actually they were too late bringing in the interest rate rises and then they went too high and now they're too slow bringing in those cuts. But I never really understood what the need was for the interest rate rises anyway, because that's if there is this sort of spiral in the economy and, you know, wage growth and inflationary costs that can actually be tempered by interest rates here. Whereas actually they were all external. These were about energy prices hitting us from abroad, from a war that we didn't declare and have yet to been able to end with our support for Ukraine and other issues. We're not in control of that. So what was the purpose of raising interest rates in the first place anyway?
Well, my interpretation is a little bit different. Obviously, the prices that rose the most over the last few years were energy and food. You can point to external factors there. But the bigger picture is that the Bank of England had left interest rates at very low levels for a long period of time, and also printed an enormous amount of money and pumped it into the economy during the COVID crisis. And that, I think, was the underlying cause of inflation. So the bank shouldn't have done that. It should have been quicker to reverse that boost to the monetary side of the economy. So it was too slow to raise rates on the way up.
Right.
Now, though, the picture is completely different. So, the growth in money and credit has basically slowed to zero. If you look at the level of prices, they've actually barely changed over the last few months. We're just dealing with the legacy of what happened 6 to 12 months ago. So I would already be voting to cut rates.
Yeah.
And indeed, other central banks have already started to do so. Interestingly, the Swiss central bank cut interest rates today. Now, Switzerland is, an open economy as well. They had exactly the same shocks from energy and food prices, but they didn't see inflation surge because they kept monetary policy well under control. So it didn't fuel the surge in inflation that we've had here.
And there were all the fears, weren't there? And I still remember the Bank of England, a governor sort of talking about how, people shouldn't get wage rises because prices were going up because, that was going to spiral inflation. Of course, they were quite happy to give bonuses to people working at the Bank of England. Of course, he was on, $500,000 plus. Although he couldn't, I always still love that. He didn't know what he actually earned, but it was in the region of. It was so much, he just didn't know. But he thought it was important, someone like him wouldn't take a pay rise, but he didn't understand that people on, average, in fact, even, above average wages really saw their spending power squeezed by the mortgages or the rents going up and energy bills and everything else. And a lot of people, of course, used up a lot of savings during lockdown. Some people accumulated savings, but it tended to be either or, didn't it? In terms of where wages are going to go, a lot of people have had wage rises. We've seen across the public sector, a lot in the private sector having wage rises, but those wage rises on average, unless you moved to a new career, a new job where they were offering super duper new money to get new people in because they'd lost a lot of staff. People have not largely seen wage rises that have covered all of the inflationary costs of the last few years, have they?
Well, that's right. I think the Bank of England's comments on wages are not only terrible public relations for the bank, but I also think they're bad economics. We do need a period of a relatively rapid increase in wages because partly it's just catch up from the previous period when prices were rising much faster than wages, but also we've got labour shortages, and one of the ways to encourage people to get back into work is for them to be paid more. So I would be completely relaxed if I were at the bank about what's happening to wages. But to the extent there are any concerns about sort of so-called wage price spiral, they should be fading anyway because the labour market is cooling. The number of vacancies is dropping. More people are coming back into the labour market. Pay settlements are starting to fall. So if that is something the Bank of England is worried about, then I don't think it'll be worried about that for much longer.
No, indeed, but you say, but they seem to have this. We talk about fiscal drag a lot. They seem to have an awful lot of, bank drag in terms of their decision making. And what did you make of Rishi Sunak saying that, the economy was going to bounce back? This was the year on the right track. I mean, I'm feeling quite sort of happy about life today. It's quite sunny, and walking along in the sunshine, the blue sky does try to perk your spirits up a bit. But is there any evidence the economy does feel that way?
Yes, actually, as you know, the economy slipped into the dreaded technical recession in the second half of last year. So there were 2 quarters where the economy actually shrank in a row. But we've had plenty of survey indicators suggesting that the economy returned to growth in the first quarter of this year, including an important private sector business survey that came out this morning. And over the rest of the year, we should see more benefits coming through from lower inflation, lower interest rates. I think the Bank of England could still start to cut rates as early as May. And there are other positive things going on in the background as well. So, big increases in the national living wage and state pension in some forms of working age benefits. So I think this year will be a year of much better growth, but still well below where we should be.
Yeah.
I mean,
And
much better growth at the moment might mean 1%, but that's
Yeah.
still pretty feeble
But
compared to
isn't
what we've
it?
had in the past.
We still need to get people's confidence. You need business confidence to invest and employ people. But again, it shouldn't be a misplaced confidence. It's got to be based on the reality and the confidence of
But we are
consumers.
starting to see that. There are surveys of both consumer and business confidence that are turning up.
Yeah.
But they are very heavily based on this assumption of big falls in inflation and in interest rates. So there's still a lot of focus on the Bank of England being willing to deliver the cuts in interest rates that people are hoping for and
But
expecting.
also that we don't have another shock, an external shock like we've had. I mean, goodness knows how uncertain our times are. Can I also ask you about council tax? Because then everyone's been getting their council tax bills. Oh, what a surprise, they've all gone up. We've seen a number of councils, Birmingham, among the councils that have gone bankrupt, where they're seeing, is it a 21% increase in their council tax for fewer services? Although, of course, they can still pay to do all that woke nonsense diversity stuff. But there we are. But the average annual council tax bill, it's been announced today, will rise by £106 this year. Basically, the max is 5%. Everyone's putting it up by 5% for the average Band D property. So the average bill is going to be, wait for it, £2,171 pounds, with all of the 153 upper tier councils applying for some or all of the social care precept 2%, so an extra 2% to spend on social care. That's a heck of a lot of money for a lot of people. I mean, that is a huge sum. Okay, people tend to pay it by direct debit, but that is a big sum of money to come out of people's take-home pay, isn't it?
Yeah, the government does have a good line that if you're on average earnings, you're paying a lower rate of tax on your income than you have since 1975. But that's partly, of course, because other taxes have gone up a lot, including council tax. So the burden is shifting away from taxes on income from employment, which I think is a good thing, but it's simply popping up somewhere else. So a lot of people won't see the sort of full benefit of these cuts in national insurance because they'll simply be spending the additional money on paying their council tax bills as well. And council tax is a particularly bad tax. It's what economists call a regressive tax. It has a disproportionate impact on the budgets of people on lower incomes. I think there's a strong case for reforming council tax, perhaps linking it more closely to what property values actually are.
Now you know as well as I do.
Tax.
Of course, there's a strong case for reforming council tax. It's absolutely absurd. I mean, I know to the flat I have and my neighbour's flat, we pay the same council tax, and our properties are vastly different sizes. And of course, a lot of people say that. However, you know as well as I do, the government that decides to do this will face the wrath of all of the voters who do badly out of that change, because the only point of doing that change will be to have people pay more. There's never going to be a change that's going, we're going to make sure fewer people pay so much tax. It's going to be people paying more. And there'll be a few people who win, vastly more who lose, and they're going to be unhappy. And what they're going to do? they're going to blame the government that did this. It's one of the reasons why this, like pension reform and everything else, gets kicked into the long grass.
Oh, I absolutely agree with that. Planning reform is another good example, because although absolutely everybody, including Rachel Reeves earlier this week, was identifying problems in the planning system as a key factor behind the housing crisis,
Rachel.
nobody's going to tackle that in an election year.
No, absolutely. Julian Jessop, a pleasure to talk to you. Thank you very much indeed.